It's time for part 2 of the #1 Southern California housing market update, and we are here to run through the median home price for the counties in Southern California. We're going to dive into the Altos Research Report data from a national level all the way down to a county level to show you where things are right now. And we're going to show you something we haven't shown you yet, and that is the data for different price points. On my channel, in the comments, and with conversations and in the media, we hear about different price points are doing different things. Well, you can see what's going on in the move-up market, in the luxury market, and in the first-time homebuyer market with the data we're going to show you. Hey there. Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best data-driven decisions in this crazy market, and we're here with another one of our 2-week updates. We're going to go through median home prices, we're going to go through days on market, and we're going to cover a whole lot more. So if you're ready to dive into the numbers for Los Angeles, Orange County, Riverside, San Diego, San Bernardino, and Ventura counties, plus statewide and national numbers, hit that like button. And let's get started. So let's dive into the data, taking a first look at median home price for the month of August in 2022. And we're using our trusty InfoSparks tool that shows us exactly where the median home price is. And last month when we went over median home price, we showed you that it was dropping. Well, there's something new in certain counties, and we actually see an increase. So here you can see that in Orange County and Riverside, the median home price actually went up a little bit in the month of August. Now that is atypical. Typically this time of year, we will now start to see, and if you look in years past, you're going to start to see that this is the time of year where median home price drops and continues to drop through the rest of the year until it turns around at the beginning of the following year. So we had a big drop in April. That we told you was atypical as well. That was a much sooner drop in median home price. Particularly, we saw a strong drop in median home price in Orange County. It did go up a little bit more in Riverside, but then we saw the drop when we ran the July numbers in LA and Riverside. So the drops happened, but we've rallied back a tiny bit when we shouldn't have in Orange County and Riverside. So very interesting, crazy days. That's why you need to keep watching these. The other thing to look at that we were able to see with this report, and you can see if you're an email newsletter subscriber, you'll be able to dive into the data too. We can see the year-over-year change in median home price over here. So 9.3%, almost 10% increase year over year in Orange County. LA was only a 1.8% increase. Riverside is a 10.1% increase. So still big increases. Now these don't match the numbers we saw, 18 and 20% plus, but these are big numbers. It also shows that LA County has a slowdown in that increase. Of course, this shows there's a slowdown in the year-over-year increase in price. This doesn't necessarily show that prices are dropping. It's showing a slowdown in the increases. Those are two distinct things. And you can see in LA that we're getting to the point where we may see the numbers flatten out completely and maybe even go backwards for median home price year over year. Of course, that's why you have to keep tuned into this channel so you can see the months ahead. In the median home price for the other 3 counties we're tracking in Southern California, we can see that these 3 counties have a drop. So that means 4 counties in Southern California have a drop in the median home price. Now again, it is typical this time of year. So 2 have an increase, 4 have a drop. What does that mean? That means all real estate is local, and we could dive in even deeper if you dove into the different price points, if you dove into specific neighborhoods. That's why listening to national news isn't going to help you. You need to know what's going on in your county, city, your specific area. So we can see that we have the drop in median home price for all of these counties, somewhat precipitous drop in Ventura County, went from 841 down to 800. So that's a drop and a somewhat significant drop, but it is the time of year where we see drops. And then looking at year over year, San Bernardino saw an increase of 7.5%, San Diego 7.4%. And Ventura is at 3.2%. That is a more typical level of appreciation. It shows that the level of appreciation is slowing in these counties as well, but we're still not at a point where the median home price has gone to a 0% or a negative increase in the year-over-year value. So there are the median home prices for Southern California. And don't forget that we're real estate agents based in Southern California. If you appreciate our updates and all the content we create, we can help you sell or buy in SoCal and beyond. So reach out now. We have a link above and a link below. And it's time to dive into one of my favorite parts. That's the Altos Research Reports. We're going to start at the national level and dive down all the way to the county level. But don't forget, you can type in any city or zip code and you'll get these reports automatically. Just type it into the box. It says search, and then you'll be able to sign up. So let's start at the national level. We're going to look at a few different numbers, and then we're going to show you something today we haven't shown you before on this channel for these reports. Now, of course, there's a ton of data built into the Altos Research Reports. One of the cool things is the Market Action Index gives you a quick overview on where we are as to whether it's a buyer's market or seller's market. Basically crunches the data and gives you a quick barometer you can see right in the center of the page. You can also dive in deeper and compare historically. So that's what we're doing here at a national level. And you can see right now that we are at 46.78 is this, the 7-day average. And what's important to see is that this is historically still considered a seller's market. In fact, a strong seller's market. And we need to look at how it compares historically. This time it was a little bit better in 2021, a little bit more of a seller's market. We know that. In 2020, a crazy market, only a tiny bit better. We're talking fractions here. So this really is a market that still likes 2020. And then you look over here. Now remember, for this, the lower the number, the closer it is to a buyer's market. So you can see that in 2019, we were closer to a buyer's market. So definitely keep that in perspective when you look at this number. And it also is going to tell you month over month how things compare. And it's important to keep into perspective that typically this time of year, it will become slightly less of a seller's market. So as you look at this month over month, you're going to see the number theoretically go down. And then after the first of the year, we're going to start to go back into a spring buying season. Maybe, who knows? We'll track that data. Now, inventory has been a huge discussion. This has been in the news, how inventory dramatically increased. And you can see there was the increase. As soon as interest rates went up, inventory did start to go up. But since then, it has leveled off, which again is typical for this time of year. We don't see it continuing to climb. In fact, the dots here, if you look year over year, we have slightly more inventory than we did in 2021. It's about even to 2020 at this time. And it's well below where we were 3 years ago in 2019. Another big topic is properties are taking longer to sell. And of course they are, as things have slowed down, as interest rates went up. We can see that the median days on market for properties nationally have gone up. But again, put it in perspective. So here it is at 42 for all property types. We're going to show you something interesting when we get down to the county level. We're at 42 days on market. This is certainly higher than we were last year. But actually, look, around the holidays, which is the slower time, it was taking longer at a national level to sell homes. And nobody was scared at that point in time. It's suddenly scary now. Year over year, it is taking longer. But then we go back at the national level to 2020, and it actually took longer in September of 2020. And back then, we were talking about how crazy fast the market was. And of course, 2019, it took 70 days is what that said. Make sure you subscribe so you can get these charts. Next up, state level, California, big state, covers a lot of ground. You can see that we are, according to the Market Action Index, still a strong seller's market at the statewide level. Of course, you need to dive in and check your county, your local city. I have pulled up inventory, and we can see that inventory dramatically increased. We heard about that in the news. It was also when interest rates were going up, but it has since leveled off. That's where it was getting a little scary. And we were saying, hey, we need to continue to track this as it was increasing. But the past couple weeks, it's leveled off, and we can start to see it's actually starting to go down. That's a good sign for stabilization in the market. So if you compare the level of inventory to last year, we certainly have a lot more this year at the state level. And then 2020, which was also a record low level of inventory, we're still above that. But you can see here that in 2019, we had more inventory. So if you look at a normal market, a pre-COVID market, we had more inventory back then at this time of year. Starting off with Orange County, and make sure you sign up for this. If you are in Orange County, the Market Action Index, strong sellers market, it is down slightly, very so slightly since last month. Then we look at inventory, and inventory has turned. It was going up, and then it took that turn to go down. So we are starting to lose inventory in the marketplace right now. Now, year over year, we're up. But if you go back 2 years, we actually had more inventory 2 years ago in that hot sellers market. And then if you go back to September of 2019, we had way more inventory than we do now. Next big topic in the news, median days on market. It is taking longer to sell properties. We see that in the data. We see that on our listings. But is it at a level where it's critical, where we should start to worry? Well, we can see we're at 42 days. That is the median days on market number. And it is certainly higher than it was at certain points in the year. At the start of the year, we were at 7. Stuff was flying off the shelves. The thing that's important to look at is year over year. So in 2021, that crazy market, it still took 28 days around this time of year. And then we go back to 2020, 35 days. So we're still slightly above that. That was a crazy market. But then let's go to a normal market, and we can see that it is 63 days. So a normal market took much longer. And then if we go back to January, early January of 2020, just before COVID reared its ugly head and changed things dramatically, it was actually taking 91 days. So twice as long as it is now to sell is what it took back then. We'll see where we end up this January, but put it in perspective. Oh, and this is one cool way to use Altos that we haven't yet shown you, but we can actually break it down by market segments, because people are talking about, hey, the luxury market's doing this, the move-up market's doing this, the first-time home buyer market's doing this. So with this, we can look at the 90-day average for the different price ranges. The market segments are broken down into quartiles. So the most expensive quartile at the top and the least expensive at the bottom, and then you've got the two in between. So that divvies up all the inventory within a given market. Bear in mind that the top quartile is going to be a different price point depending on your county and your city. You can see here when you look at the numbers that the top 25% of homes, the top 25 most expensive homes, are taking 42 days to sell. So that is pushing up the median days on market. When you look at the other homes below that, your 3 quartiles below, you're at 28, 21, and 21. So when you parse it up like that, you can see that homes, other than the most expensive 25%, are taking still only 28 to 21 days to sell. So those markets are moving faster. So I think it's relevant to obviously take a look at different price points, and you can do that when you subscribe to Altos Research Reports. Moving on to Los Angeles County, and we can see still a strong seller's market, dropped a tiny bit since last month. You're gonna notice a trend when we run through these. And then inventory also, we had that big run up in inventory. It has since peaked and started to go down. This is definitely more inventory than 2020 and 2021, but you go back to 2019 and we had more inventory in that normal market. And the reasons we're covering inventory amongst all this other data here, this is going to give you a quick overview of where things are headed. So in the news, they were talking about the dramatic increase in inventory, and that's right, especially if you're looking back at June and July into May, and that's what the news is reporting on. August into September, things have shifted. You're looking at leading edge data, where things are headed before it's showing up in the news. It will show up, and maybe they'll report on the fact that inventory has turned. The other thing that is important about the change in inventory levels, had inventory levels continued on the direction they were headed, plus demand stayed low like it has, that's when we'd start to see big price drops potentially in the market, because there would be way more inventory. Sellers would be competing for buyers. We are seeing a turn in inventory, and I know interest rates are up and there's fewer buyers out there, but like we showed in our first video, if the ratio between supply and demand stays small, we're not going to get a buildup in inventory. Riverside County, still strong sellers market. Same story with inventory. It's leveled off. It hasn't quite started to reduce, but it's leveled off, and it is definitely below 2019 levels. And a similar story, we're seeing the median days on market go up, but that's not a surprise. We're getting closer to a normal market. San Bernardino, we can see inventory did spike, and it's actually very close to September 2019 levels, but it's leveling off. So we've got the same pattern, and we still have a seller's market. And here it says slight seller's advantage. So we have to keep tracking this to see where this ends up for San Bernardino. Ventura County, we can see that the inventory has taken a fall. It turned very quickly and is now dropping, and it is pretty much around September 2020 levels, definitely below September 2019. As I mentioned, Ventura has a fewer number of properties than the other counties that we track, so the data can get skewed a little bit faster, but it's following a similar trend in the drop in inventory, and you can see that the Market Action Index says it's a strong seller's market. And San Diego County was one of the first to shift in Southern California. We saw the inventory start to peak and drop, and we can see that it's still a very strong seller's market there. Now, just 3 or 4 months ago, this was a 100% seller's market. We can see it's a big drop. Around this time of year, it starts to drop, and things have slowed down in San Diego, but these inventory levels and the fact that there's still so much demand, meaning properties going under contract, San Diego is still a strong seller's market right now, despite what you're hearing on the news about the entire world falling apart in real estate. Reach out in the comments below. I'm sure you'll have some questions or some feedback on the data we've just run through. I want to hear what you have to say. Make sure you sign up for those Altos reports. It's completely free. You can cover your market or any market in the United States. Plus, you will be subscribed to our free weekly email newsletter where we cover topics like this, plus a whole lot more that you're not going to want to miss. Check out this next update video where we dive into more on the Southern California housing market. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.